in just around 23 days from May. Taking a step back, as if you weren't looking at the charts, GameStop is still up 65% in everybody's portfolio. Now, I'm excited to get into the charts, but there is a lot of stuff that I have to cover right now. First of all, GameStop, you can see these wicks flying up and hitting different price levels for a split second. This is stop loss hunting by market makers. If you have a sell limit, it's probably going to get hit with these wicks. This is a strategy to get people to sell if they have a limit order to sell before the price is going to go higher than that limit order, and it's already anticipated. Now, a couple things I want to point out. Short exempt volume has been on a decline since we ran. 1.9 million, 1.8, 1.6, 1, and then 900,000, 500,000, 378 for GameStop, which is still very, very high. Yet, if you come and you actually take a look on the imbalance of short selling on and off market, there is a 950% short selling imbalance. GameStop is the most shorted mid-large cap in the history of the stock market, so it has to be actively managed. 950% comes out to 2.9 billion shares. That's exactly why you see stocks like Nvidia flying without any halts. Yet GameStop has 1 week and it gets halted over 30 times. It has to be actively managed. Now, this is going to bring us into some interesting stuff with AMC before we jump into the charts. The last time Zacks Equity Research had AMC as a buy was January 28, 2021. Today, Zacks finally ranks Netflix at number 1, strong buy, and AMC carries a rank of 2. We saw a recent article also that says do not short it. We also saw yesterday, we talked about it, where InvestorPlace said do not buy AMC. Basically, please, let's not do 2021 again, right? Now, you're also seeing institutions buying up AMC, almost hitting the level of June of 2021. And keep in mind, there are more shares circulating on the float. So institutions are buying. Guess what? We have another article. Stay away from AMC stock. Okay, I want to move on to the short exempts also decreasing on AMC down to 660,000, which is still extremely high. And I want to point out that institutions are purchasing. Short exempts are dying down. Short interest is also dying down and staying low at 12.41%. According to Ortex. Now, we know it's much higher, but what's reported is what we pay attention to for the trend because it's all we have. Why is this a good thing? This is theoretically showing us that shorts are not jumping back in, right? Shorts don't want to get their heads ripped off. And the CAD system is about to be implemented, and we're going to talk about that after the charts. If you haven't, guys, yet, please like the video. Since I research, edit, upload, record these for you guys all for free, but not in that order, that's all I ask. Just like the video, subscribe to the channel, and turn post notifications on. Okay, I want to talk about the charts really quick. First of all, AMC sort of breaking this ascending support level, but it is still holding pretty strong around 470. I said 350 could be a potential bottom if we break below 435. We slightly flashed below 435, but built support off of it. Didn't test 350 or 380. So that's a good thing to see. This is the pattern that played out back in January of 2021 after it rallied. If we see sort of the same scenario, this is what you would see for AMC before having that June run up, which was about double, triple, right? The January one. Not necessarily percentage wise, but that would lead us right into mid-August before we have a break over that relative high that we just hit around 12 bucks. But this is something that you could see late May, early June, come back up to $7, and then late June up to around $8.60. This is something that you could see if it played out similarly to that. GameStop as well. I want to talk about a couple of things. First of all, we're hitting 47.66 on the RSI. If we look back here when we squoze and we drop down, the RSI has hit 46. Okay, so GameStop could go slightly lower, yet we did break under the $18 level that we said has to hold. We're trading at $17.88, down 2.4% on the day. Another thing that I wanted to note that could be extremely, extremely bearish is if we take a look at the cycles, I have the tops GameStop loves to hit, right? It loves to peak and then have a second peak, peak, second peak, peak, second peak, peak, second peak. Peak, technically, second peak, okay? And that's just based off of the time frames as when they're supposed to peak. This doesn't look like too much of a peak, but it was, right? Then a second peak, which means we could come all the way down for another 260 days before peaking once again if it were to play through another cycle. Now, this is the same scenario as AMC. Hypothetically, theoretically, if it were to play out something similar back in January, you're going to see consolidation, right up till around June 10th, June 12th, and then a pop, which is going to bring you right up to about 33, and then cap out around $50, $52. Consolidate sideways and essentially just play through other cycles. So this is the couple scenarios that I want to point out and put on your radar, but this is all invalid, and the reason for that, well, it could be invalid, is because of the CAT system. Nothing is different except everything being different, if that makes sense. The CAT system will change everything, and it's something we didn't have back in the 2021 run-up, the 2021 squeeze. So if they stay in after next week, they're going to be playing a dangerous game. If we look at GameStop on the levels, we come down to this $18 level. This is a crucial level. I've talked about it in Discord all night last night. If we open and close a full candlestick on the daily time frame, right now we're on the 4-hour, if we open and close a full candlestick under $18, that is going to be bearish. If we break under 18, which we're doing right now, and we close under it, fine, but the day after, we have to close back above in order for it to be bullish. That is what I see. $18 is a crucial level, but I also want to note, once that RSI hits 46, we could be ripping from there. And if this scenario played out like this, right, like back in 2021, you could see GameStop come to actually test 16 pretty quickly and then go higher. Either way, if you break under 18, you break under 16, you get a full candle close, chances are GameStop's coming back to $10 and they controlled this thing back down, which is the less likely case scenario. There is 1 week until the CAT system is implemented, May 31st, so keep that in mind. Now, I want to touch on the SPY, Tesla, and crypto before we close out the video. But first, guys, if you want up to 10 free fractional shares, I'm trying to help you. It's free money. Use one of the top links under the description of the video. Open a Moomoo account. It's a free broker that gives you level 2 order book data for free so you can see where whales are loading up and dropping off shares of any given stock. Access to viewing other exchanges, a customizable earnings calendar, trading options, going long, going short as a retail trader, and more. Open an account with them. Deposit $1 into there to start earning benefits. If you deposit $100, you're getting 10 free fractional shares of Google, Apple, Amazon, Meta, Nvidia, Microsoft, Tesla. Ton of benefits by using my link, opening an account, and making a deposit into there. Also, guys, top link under the video, elevate your trading game by getting my personal indicator. I've showed you time and time again already how many trades it already called out. Yesterday, it called out the decline on the SPY. It called out the decline on Tesla. Played both of those, held overnight like a degen, but before that was up over 100% in profit. It's been giving us the signals and they're playing out correctly, and I'm just getting used to using it. So if you want to help your trading journey out, try it for a month, and if you execute the trades profitably and are getting a payout of more than you're paying for the subscription, keep it. If not, cancel it. That's all I'm asking you. Try it out. Okay, the SPY dove off yesterday, but got a beautiful bounce off of this channel around 525.80. Getting a pop right here, but getting rejected right around 530. This is not what we want to see for the SPY. We saw the RSI cool off, which is a good thing to see, but if we get rejected at 530 coming into the short week ahead, watch for a test at 524 and a breakdown to 520. That's what I see happening. I see it coming down to the bottom of this parallel channel at 520 to hold, which is something my indicator called out as well. If we remain bearish, if we can't break over 530 today, that's what I see coming for the SPY, a larger sell-off. Now, something that also isn't good for the market, China has completely surrounded Taiwan in all directions. China currently has 30 ships and 40 fighter jets active in training. War is never good for the market. However, it could create good fire sales. Now, Tesla sold off yesterday, broke back up today, up about 3%, trading at 178.82. We want to see a close above this level at 176.50. This is crucial. We got an inverse head and shoulders here, and to start next week, if we close above this, that will be extremely bullish. And if we do need a cool off, I see it coming down to 167 and just building a large candle for next week before moving higher over the next couple of months. June, July, August, I expect to be extremely bullish for Tesla, SPY, crypto, meme plays, etc., and it's going to be a great opportunity. I think right now there are some fire sales out there. Yesterday, the BlackRock's Bitcoin ETF saw $89 million in inflows, now holding over 19 million in Bitcoin. Bitcoin doing extremely well, got this flushed down, just like my indicator called out as well. Bounce off of 66,500. If we can't re-break over 69,000, expect a retrace down to 64. Overall, I'm watching 69,000 over the weekend. Now, SEC just approved 8 Ethereum ETFs, which is good for ETH, and this week did extremely well, but it's down 3%. I told you it's a buy the rumor, sell the news type of deal. Now, even though this is the case, I am still holding my ETH, and the reason being is because I see ETH capping out around mid-August, which lines up to everything else, okay? It's going to make that second peak, that second high. I think it's going to be slightly higher than where it is now, around 4,300 potentially, and that is where I will debate on pulling my position or at least cutting it. Last but not least, couple sprinkles on top. Standard Chartered Bank says Solana and XRP ETFs could launch in 2025, and the U.S. House passes bill to ban Federal Reserve from creating a central bank digital currency. Overall, guys, that is what I got for you for today's video. Hopefully you enjoyed watching or found value out of the video. Enjoy the rest of your weekend. If you want to come talk with me and the most amazing people throughout the weekend so you guys aren't missing out on what is about to happen next week with the market, get in the Discord. What are you doing? I post my trades as soon as I take them. We have options trading alerts in there. We post our gains, post our losses, talk stocks, as well as crypto all day long. There are no bad questions. Whether you're a beginner or advanced trader, this is the place to go. Get your vibes right, level up your trading journey, and let's make some money together. I love you all. Lottery Stocks out.